Welcome to CSIS Online. The way we bring you events is changing, but we'll still present live analysis and award-winning digital media from our Dracopolis Ideas Lab. All on your time, live or on demand. This is CSIS Online.
Good morning, everyone. Good afternoon to those of you in Europe. And if any brave souls are calling in from Asia on a Friday evening, then good evening to you. I'm Ben Cahill. I'm a senior fellow in the Energy Security and Climate Change program at CSIS. And we're really pleased today to host Equinor and Eirik Wærness for the presentation of Equinor's Energy Perspectives report. Eirik is well known to many of you. He's the Senior Vice President and Chief Economist at Equinor. He's also an old friend of the energy program at CSIS. Been very privileged in the past to host Eirik for the presentation of Equinor's long-term scenarios, and it's always a very fascinating, information-packed presentation, so we look forward to a good discussion today. Before we get started, just a few notes on how to submit questions. You should see a button just below the video screen, in the middle of your screen, a green button where you can submit questions. Please do feel free to add your questions there. We'll have lots of time for Q&A after Eirik's presentation. We'll monitor those and hope to get to as many as possible. And we're going to turn the floor over to Eirik in just a minute. He'll probably present for about 25 minutes, and then we'll have plenty of time for moderated Q&A. So with that very brief introduction, let me just turn it over. This is the 10th edition of Equinor's Energy Perspectives report, which is a great achievement. It's a real milestone for Equinor to have done this 10 times. It's no small feat to do a long-term scenario exercise like this. It's a ton of work, but especially in a year like this, where there have been such huge disruptions to the global energy system, to economics, politics, as a result of COVID-19 and all the impacts on the energy system. So looking forward to a fascinating discussion today. And with that, I think I will turn the floor over to Eirik Wærness. Again, he's Senior Vice President, Chief Economist at Equinor. And Eirik, the floor is yours. Please feel free to start your presentation.
Thanks, Ben, for the kind introduction, and it's good to be back to CSIS, even though it's in a digital version this time. Good morning to everyone. Good afternoon from Europe. I'm at the west coast of Norway right now. Fortunate enough to be able to sit in my office, but we are still at COVID low participation rates in the office, if you can say so. We have a maximum capacity of 25%, unfortunately, still here in Europe as well. So we're still in the middle of the pandemic, and hopefully situation will improve very quickly now when we have our hopes up for the vaccine. I'll give you a presentation of our energy perspectives, the 10th edition this year. As Ben said, we're looking out to 2050, and of course doing that with the current situation has been especially difficult. We've done it 10 times. One of those times, a couple of years back, we had a pandemic as one of the potential black swans that we did not model. So that calls for some interesting thinking as well. Looking back, this is the 10th anniversary. Of course, over the last decade, we've seen very large changes in the energy market. The global economy has continued to grow, is 30% larger than it was 10 years ago. Energy demand has continued to grow. Oil and the gas demand has grown by 11 or 16% since 2011. Paved the way for the largest change in the global energy system, at least on the supply side, the shale revolution, where the United States has come out as the largest producer, which is probably the biggest change that we've seen over the last decade in terms of size, at least, into the global energy markets. Renewables have become massively cheaper, and we see that on solar and wind electricity generation in particular. And in spite of that change, CO2 emissions have continued to grow. And in spite of enormous attention on the climate change issue, 9 COP conferences later than 2011, CO2 emissions continue to go up. And of course, then we were hit by the COVID pandemic, which is first and foremost a humanitarian disaster. Massive number of people that are dying, The humanitarian toll caused by also the lockdown measures remain to be seen to some extent, but also, of course, attempting to limit the consequences of the pandemic has sent the world into a huge recession with increased unemployment and lower energy demand as consequences. And that's part of the picture here, and where we're still fighting to get out of this, and we don't have a line of sight to where we will be once we're out of the COVID pandemic situation. Looking back 9 years, 10 editions, we can take a look at it, and it was tempting to take a look at what we thought back then. And we were too optimistic on coal demand. We thought coal demand would continue to grow very moderately, but out to 2030. But it actually peaked in 2013 already. So that was a really bad forecast. And back then, we only made forecasts. We missed on oil demand on the downside. We were too optimistic on energy efficiency and on the impact of electrification, so that by 2019, we thought oil demand would be 7 million barrels per day lower than it actually was, 93 instead of 100. And of course, this year we come out with a more or less perfect forecast for oil demand, but for all the wrong reasons. Where we were really surprised was our ability to forecast wind and solar generation. We only missed by 2%. That's, if I'm honest, that's a coincidence, but it makes us pretty proud, at least in terms of being able to forecast something that grew that fast for such a small base with such an accuracy. But it is a coincidence. So that's what the world looked like in 2011 compared to what we came out at. Going forward, we're talking about the possibility of a massive energy transition, and whether we will be able to do that in a sustainable manner to address sustainable development goals. That makes it natural to look back. And throughout humankind, we've gone through some energy transitions over the last 200 years. Before that, we were all in the biomass age. And for most of human history, wood has been the main source of energy. Then after the Industrial Revolution, at the end of the 19th century, we entered into the coal age. And coal became the largest source of energy. Sometime in the middle of the last century, we entered into the oil age. Oil became the largest source of energy. We also added use of natural gas. We've added nuclear. We've added hydroelectricity. And if you look carefully, you can also see the renewable revolution towards the end of here, the last decade. But is this really a historical story of energy transitions? No. The reality is a series of continued energy additions, where we add on energy demand. We use more and more energy, and then we have to find new sources to satisfy that demand. We use much more biomass now than we did any time during the biomass age. We use 70% more coal than we did when we agreed the Kyoto Agreement in 1997. We use more coal than we ever did during the coal age. We use much more oil now than we did when we started the oil age. So the history is about growing energy demand, facilitating growing income, facilitating larger populations, and enormous improvements in wealth and income.
Eirik,
and the question,
if I can interrupt for just 1 second. Yeah? If you do want to share your presentation, you can just go ahead and share it on the screen.
Oh, I'm sorry. I'm sorry. Sorry about that.
Just so we have some visuals to complement the narrative. Thank you.
Yes. This is the energy addition reality. That's the energy transition story that I went through. Sorry about that. So the challenge now is, of course, can we deliver on the necessary energy transition without adding on new uses of energy in a sustainable way? Of course, the use of energy over the last decades, and in spite of the increased focus on climate change, the growth in the price of the increased use of energy over the last decades is that CO2 emissions have continued to grow, as I mentioned. Not only the last decade, but over the last decades. And that's in spite of a lot of focus, a lot of attempts at agreeing on changing the energy mix. It's on addressing the climate change issue. We know that we have to break this curve and make it come down at some point, and towards net zero, towards if not gross zero, at least net zero. But this, over the last 30 years, hardly anything has happened, with 2 exceptions. And that's the global financial crisis, 2009, and it's now with the COVID pandemic. And the reason why CO2 emissions have gone down has nothing to do with energy policies, nothing to do with technology changes, nothing to do with energy transition trends, but it has only to do with lower economic or negative economic growth followed by a lower energy demand and therefore lower emissions. And this is what has changed. And if you look at where the emissions have gone up over the last decades, it's in the same regions as where energy demand has gone up. It's in the emerging economies. The industrialized region at the bottom here, CO2 emissions are basically flat or slightly declining, as is our energy demand. But emerging economies' energy demand has gone up. The use of coal, oil, and gas has gone up, and in particular in China, where by 2010, China became the largest source of energy demand globally, and where they now, together with North America, constitutes 47% of global energy-related emissions. So if we are to get the emissions down, this is about North America and China and the EU and the rest of the world as starting to address this challenge seriously. So then when we ask the question, where's the energy world moving? Well, that depends on the signpost that you choose to assign weight to, whether you believe those will continue to drive the development, whether it's in terms of energy efficiency, technology development, the growth in EV sales, whether it's that CO2 emissions have continued to grow until this year, whether it's the US-China trade war, to what extent is that going to continue and drive the development in terms of global decision-making, technology development, trade, lack of trust, exchange of technology, et cetera, et cetera. So you can find signposts for the future of the world of energy that go in very different directions. And then, of course, on top of this, then what did COVID-19 bring? How do we get out of COVID? What we chose to do was, instead of making scenarios for the next years that would then form different starting points for future energy scenarios, we've made one base case as to where we think is most likely that the world will go over the next couple of years, and then we let the scenarios play out, the long-term scenarios play out with the same starting point. We could have chosen a different approach, but it would have made it much more difficult, and we would have many more scenarios. But in terms of the COVID pandemic, this was made about a month ago, and of course the global new cases have gone up, the number of dead people have gone up. So the disaster, if you like, is playing out as we speak. We thought we would have in our central case, which is where the GDP development here is showing. This is what we expect: significant improvement in GDP growth next year, bringing us back to the income level we had at the end of 2019. Sometime next year, continued growth. Oil demand coming back up, but not reaching the 2019 levels until slightly later in the decade. This base case was based on the assumptions of vaccine development, then vaccine distribution, vaccine impact, which is very much in line with what the last week's development then have given us more hope to believe in, if you like. So this base case is very much in line with what we now think is actually going to happen, where we get a rebound in economic activity and a rebound in oil demand over the next couple of years. And then by 2023, we allow the scenarios to play out. So what are those scenarios? Well, we still have two scenarios, as we've had over the previous editions as well, that capture where the world would be heading, depending on the weight you assign to assumptions and changes that we can see right now. And the reform scenario is built on benign global competition and cooperation, a market and technology-driven scenario after 2030. Up to 2030, we assume that energy and climate policies will be tightened significantly so that countries deliver on their nationally determined contributions in the Paris Agreement. Still a focus on economic growth being prioritized as a key policy parameter, if you like, both for monetary and fiscal policies. Significant energy efficiency improvements, gradual reductions in CO2 emissions, but not sufficient to deliver on climate targets. So we're heading for something like 2.5 degrees warming if you let that emission trajectory that comes out of this scenario develop beyond 2050. Then we have the rivalry scenario, characterized by continued geopolitical uncertainty and volatility, lack of trust, lack of ability to cooperate, focus on your constituencies' jobs instead of on efficient solutions, less exchange of technologies, slower economic integration, slower trade, more protectionism, therefore lower economic growth, but also lower energy transition speed, increased use of coal compared to the reform case, lower focus on energy and climate policies, etc. A scenario which we do not want by any means, not a sustainable development, but something we cannot exclude from happening. And then the normative scenario, where do we have to go in order to deliver on climate targets? This is a scenario which is consistent with well below 2-degree target. We've renamed it this year. It's called rebalance, because we focus more on other sustainable development goals as in addition to the climate change goal. So this is about sustainable development goal number 7, sufficient amounts of energy delivered to the world, in particular to the emerging world. It's about addressing poverty. It's about addressing development needs that would lead to higher education levels and lower fertility rates, as an example, in emerging economies. That means that we in the industrialized part of the world will have to focus more on well-being than on GDP growth. We will have to pay for the transition to a larger extent than we did in last year's renewal scenario. And emerging economies get the chance to close the income gap and leapfrog to a more sustainable path while having sufficient amounts of energy. Why rebalance? Because we live in a fundamentally very unbalanced, imbalanced world. The 15% of us that are lucky enough to live in these dark countries here in this map, we have access to two-thirds of the value creation, 2/3 of the income on Earth. We use more than 1/3 of the energy, actually close to 40%. If the 85% rest of the population were to aspire to our lifestyles, our living standards, our way of resource-intensive consumption, we would have no chance of reaching any sustainable development goal, any resource constraint consistent development. So we will have to rebalance. Where does the world need to go? We need changes in our economy where we focus less on resource-intensive consumption. We in the industrialized world will have to pay more for our goods consumption. We will have to pay CO2 prices on our imports from emerging economies. We will have to pay for larger parts of the transition in the emerging economies. That requires a coordinated policies that protects the environment to a different way than we are doing today, that taxes emissions, that promotes human well-being and not only human economic growth, and a transition to a low-carbon energy system. And as a consequence, we can expect behavioral changes among consumers, different lifestyle choices, different work practices, different ways of transports, different way of living. And we think this is the most plausible way of achieving the climate targets in a sustainable manner broadly. That does not mean it's easy or likely or probable, but we think this is the way we have to go. In terms of economic growth globally then, and carbon emissions, if the rivalry path determines the development, if the pendulum stays there, then this is what it would look like. 1.8% annual economic growth, leading to a world that is 1.8 times larger, 80% larger, if you like, in economic terms than today. CO2 emissions come back up to the levels they had in 2018, around the middle of this decade, continue to grow to about 2040, and then come down. But not sufficient, not by all, it hardly comes down. So this is not sustainable in terms of global warming. Then we have the reform trajectory, which delivers higher GDP growth, much better energy and climate policies, and therefore much more energy efficiency improvements, so that CO2 emissions never get back to the level they had in 2018, start declining, but not sufficiently to deliver on the well below 2-degree target. So this is a 2.5-degree world if we let this continue, roughly. And then the rebalance case. This is what CO2 emissions have to be in order to be within a 1.6, 1.7 degree warming trajectory, depending on what you think about the development after 2050. The last 2 billion tons out here that we take out from 12 to around 10 is carbon capture and storage. That's a massive increase compared to what we're seeing today. We're developing a project in Norway now, which is a large one, 5 million tons per year. Well, we need 400 of those over the next 30 years to get to the levels of CCS that we're assuming in this scenario. Here we forego some economic growth relative to reform in order to achieve this type of rebalance. And I'll show you a little bit more what that means. We think a prerequisite for the sustainable development in the rebalance scenario is a larger convergence between rich and poor countries, but also between rich and poor in the industrialized countries than we see in the reform case, and that what than we see today, if you like. And if you look to the left here, the primary energy demand per capita in the 3 richest regions will develop along these 2 lines in a reform scenario and a rebalance scenario. So a much higher improvement, much better improvement in energy efficiency in the rich parts of the world, in order to make room for slightly higher use of energy per capita in the poorest regions of the world. And behind this story is also, of course, that the energy mix is changing significantly in emerging economies. So the quality of energy delivered here is much higher than what it is. It's basically, in simple terms, is moving from biomass to more electricity, also in emerging economies. In terms of income, GDP per capita, very, very, very moderate growth in GDP per capita in the 3 richest parts of the world. In order to make this acceptable, there's something about income distribution within those regions that has to take place as well, we think. And that allows for a convergence where the poorest regions are allowed a significantly higher growth in GDP per capita in order to facilitate also lower fertility rates. In Africa, as an example, higher income growth goes together with higher education, leads to higher to lower fertility rates and lower population growth. So there's some convergence here between the poorest regions and the richest regions, which we don't see in a reformed case. In terms of energy markets, then, where do these scenarios go? Well, they all deliver a significant transition. Massive growth in new renewables, particularly solar and wind. In the rebalance case, also growth in nuclear and hydroelectricity in particular. But only the rebalance scenario avoids both the energy addition, so primary energy demand goes down, and a sufficient transition also to take out 50% of the CO2 generating fuels, if you like, the fossil fuels. The 2 other scenarios do not deliver sufficiently on that variable. In terms of electricity, we will generate almost twice as much electricity by 2050 globally as we do today. That whole growth comes from new renewables. We will take out most of the coal in the electricity sector. The remaining part here will be gas, and it will be partly also handled by, or CO2, the CO2 emissions will be captured in this power sector here. The amount of electricity generated by solar panels and wind turbines here is much higher than the total electricity generated from fossil fuels today. So it illustrates the growth. Massive changes in the 2 other scenarios as well, but only rebalanced with sufficient reduction in CO2 intensive fuels. Road transport, another sector with massive changes, much less use of energy, both in the reform case and in the rebalance case, due to more efficient transportation, much more public transport systems that takes out the necessary private transportation by cars. 90% of the light-duty vehicles in a rebalance case will run on electricity, which is more efficient. The remaining oil use in that rebalance scenario in the road transport segment will be trucks. Then we're done with the biggest part of transport and electricity. What else? Well, this is the rest of the energy demand, if you like, with the exception of non-road transport. Industrial demand. This is the manufacturing sector producing all our goods, and they need a lot of energy. A lot of that is electricity today. A lot of it's directly burning fossil fuels. That will change significantly going forward. Much more electricity, much more efficiency, and in a rebalance case, also much less coal. Still quite a bit of gas in that scenario. Buildings, 1.5 to 2 billion people more need more buildings. We're going to build a lot of homes. We're going to build a lot of offices. We're going to build a lot of new cities in Asia and in other parts of the emerging world. We think it's possible to run that sector, if you like, with its heating and cooling needs, its elevators, all the other energy use we use in buildings, using less final energy consumption, much more electricity, hardly any coal, much less gas. And if you think that's impossible, then you'll have to find another way to get to the 2-degree target or well below. A lot of changes in the other scenarios as well in that sector, but not sufficient. Increased use of energy as feedstock. This is oil and gas and coal used in the components that you are having on your desk to make it possible for you to see this presentation. That will grow, and it will grow in spite of significant increased recycling, significant focus on plastic waste, also in a rebalance case. So where does oil demand go? Well, that depends, right? Depends on the scenarios. This is a really bad forecast from a chief economist in an international oil company. My boss is not happy when he sees this. Is it going to be 50 million barrels or 110 by 2050? Well, it can be both, depending on the scenario. And the reform case is in the middle. If you believe in the rebalance case, well, oil demand doesn't go to 0, it goes to 50. And the main reduction is, of course, then in the transport sector, because transport is where we use 55% of the oil today. And it's going to go down in other sectors as well. But remaining oil demand, after taking into account the growth in feedstock use, is going to be 50 million barrels per day. What about gas? Slightly different story here. We have gas demand growing in all scenarios up to 2030. One reason being that we need more gas in the power sector for a long period in order to get coal sufficiently fast out of the mix. And in fact, both in countries like China and India, the gas demand in the power sector continues to grow also in this scenario throughout the period. We'll use more gas in the power sector in China in 2050 than we do today. But in the 2030s, gas demand will have to come down, will be replaced by nuclear and renewables in the power sector, more energy efficiency, more electricity in the industrial sector takes gas demand down, et cetera, so that we by 2050 have reduced our gas demand in the industrialized world significantly compared to today, but with growth in gas demand in the emerging world. And look at the growth in China compared to the reduction in Europe. It's a significant component that where we move gas demand. And this means that North America, which will be a surplus region of gas, the CIS will continue to export gas. They will also, these regions will then have to export the gas more to China, relatively speaking, than to Europe in this scenario. And then with these numbers, what's the need for new oil and gas investments globally? These are the demand ranges that I just showed you. Oil here, very wide, and gas here, less wide. The rebalance case is the lower part of this range. If we were to stop investing there right now, which is what Greta Thunberg asked us to do at Davos in January this year, stop all investments in oil and gas and coal. In the case of oil and in the case of gas, that means declining supply every year by roughly 4 or 5%. Here's 4.5% per year because of lower pressure in the reservoirs, because things go empty. We have to replace things. That means that we would quickly get a gap between supply and demand, even in the rebalance case, that has to be filled by something new. Not necessarily a new discovery by exploration, but by significant investments on top of something that has already been discovered, but which is currently a resource and not a reserve. And that gap would mean that out here, we could only produce half of the rebalanced demand by existing resources, 25 million barrels per day versus 50. And as a whole over this period, that gap is 260 billion barrels of oil. That is as much new oil as OPEC has delivered over the last 20 years. It's a massive amount of oil in a climate consistent scenario. In the case of gas, it looks even bigger because demand doesn't come as much down. 62 trillion cubic meters of gas, that's more gas over the next 30 years, significantly more than the combined deliveries of North America, Russia, and the Middle East over the last 30 years. So we need a lot of investments in oil and gas, in addition to all the investments in the new minerals, the batteries, the wind turbines, the infrastructure lines, et cetera, in the new energy economy. So then finally, this is the energy transition over the last 120 years, or actually the energy addition over the last 120 years. If we are to succeed in delivering on a sustainable development like that in the rebalance case, we will, for the first time in human history, reduce our use of primary energy demand significantly over a 30-year period, and do that and replace sources of energy also sufficiently so that we take existing sources of energy down, not up, but replace that with carbon neutral sources of energy. That has never happened before. It's a massive challenge, and to do that over a 30-year period cannot be underestimated how difficult it is. We do part of the same in the reform case as well, but not sufficiently so. So to summarize then, we think it's possible to deliver on a sustainable energy transition. The changes taking place in the reform scenario as well are massive, and so, by the way, in the rivalry case, in terms of new opportunities for investing in new energy sources and in renewables. But the rebalance case, delivering on all the sustainable development variables and goals, while keeping the economy from collapsing, continuing to invest in all these different sources of energy with the type of price signals that we see today, is going to be a massive challenge. And the development globally is determined in the emerging economies. It's not only determined in our part of the world, but we have to make it happen through policy changes, through investment changes, to income transfers as well. Thank you.
Thank you very much, Eirik. It's a great presentation. Certainly lots of food for thought. I just want to remind the audience you can submit your questions using the green button on your screen. We do have a number of questions coming through the chat, and we'll try to get to as many of those as we can. So please continue to send those in. Let me just kick off by asking a couple of questions myself, Eirik. First, I love the long-term historical charts because they really provide great context and show the scale of the challenge that we're facing for the next 30 years. I thought I'd start by just asking kind of the obvious question, which is really about COVID-19 and the impact. So doing this kind of long-term scenario forecast is very challenging, but I'm curious about what impact COVID-19 had on all three of these scenarios as you develop them. There's lots of ways to answer this question, but maybe one is just this question about capital availability. Will we have enough capital to fund the energy transition, especially because some of the changes that we're going to make over the next 10 years are so critical to achieving these kind of long-term goals? Is there going to be enough money for things like electrification, investment in infrastructure and transmission? What impact does COVID-19 have on kind of the near-term developments that affect the long-term picture?
Well, I think regarding the short-term impact of COVID, of course, on the one hand, it's shifted energy demand and thereby CO2 emissions down. But we don't see a significant shift in energy and climate policies or large-scale energy trends as a consequence of this. So if you look at the long-term scenarios, what it does is it takes the peak of oil demand, for instance, in the reform case. It takes the level of the peak down, but it doesn't affect the timing a lot. So you get a sort of more or less the same curve. So and we already see oil demand in China is now back at where it was in 2019. A little bit uncertain how much of that is put into storage and how much of it is real demand. In many ways, the COVID challenge makes the energy transition more difficult because it increases the debt level among governments. It increases the unemployment rates among us, among consumers that have to invest in this transition ourselves. It reduces the cash flow significantly in some of the companies that were supposed to do some of these investments, etc. So it makes, in one sense, it might make it more difficult. Fortunately, renewables have kept its development more stable and actually growing, while most of the reduction in oil demand or in energy demand has come on the oil side and on the gas side. So there's some reason for hope in not slowing this too much down, right? So in terms of capital, well, there's a lot of financial capital out there these days, and of course there should be with interest rates at zero or below in many parts of the world. And then in terms of real capital, we don't do the investment numbers. We don't have the apparatus for that. IEA does, and of course we're going to have massive investments in capital-intensive manufacturing and in goods as part of this energy transition. Whether that is steel for wind turbines or solar panels or minerals for batteries or battery manufacturing factories. In terms of level of investments, but you have to also count in the fact that if we go in that direction, with the amount of transition that we have in a rebalance case, we do not have to invest as much in oil and gas or coal for that matter. So we save capital investments in parts of this spectrum. So I think it's reasonable to believe that there's going to be enough investments, enough capital, enough material. At least most people speculate about that. But it's more about concentration of some of these minerals, as an example. Where is it going to come from? how does the geopolitics around that play out? And I think more importantly, it's about the speed of change. Will we be able to, as an example, have half of global light-duty vehicles car sales in 2030 be electric? Will there be enough battery manufacturing capacity by 2030? So the speed of change is a challenge here, because these are fundamentally capital-intensive industries, and the line of sight to profitability in parts of the industries are not very clear. So I think that's more of a challenge than the actual availability of capital throughout the period.
That's great, thanks. And maybe you could expand on that a little bit by talking about some of the technology breakthroughs that you see as necessary, especially for the rebalance scenario. So you talked a little bit about carbon capture and storage. We obviously need a lot of cost reductions and scaling up for that to happen. But what other kind of technology breakthroughs do you see as necessary to kind of deliver this pace of change that we need, especially over the next 10 years?
Well, but if you look at the absolute change over a decade or 2 decades in many of the key parameters, we need technology breakthroughs, if you like, all over the place. But they're all gradual. We're not assuming sort of the big black swan coming in, whether it's cold fusion or things like that. But these changes, in order to run the global economy, which will be twice as large as today, using 15% less primary energy, is in and by itself a massive technology challenge. We will see continued cost improvements in new renewables. We will have floating offshore wind as one example of that. We will have much cheaper also bottom fixed offshore wind. We will see demand management systems. We will see technology development in public transportation also, in terms of allowing modern citizens of modern and middle class citizens of 2040 to satisfy their transport needs in very different ways than we do today, in order to get that reduction in road traffic, as an example. How can we move goods as efficiently across borders as is implicitly assumed in these energy efficiency numbers? So, and this is of course about 3D printing. It's about demand management systems that allows us to use much less electricity in the middle of the night than we do today, and it's all over the place. Digitalization will play an enormous role here in a different way than today. Digitalization so far is about using more electricity. It's about using time differently, but we still have a way to go in order to see the productivity gains that digitalization carries with it in terms of promises. So that will also be part of this. So it's technology change across the spectrum. Can we make batteries more efficient than today? Not only make the battery itself more efficient, but can we produce them with less use of energy? How do we refine minerals more efficiently by moving it out of a mine in Bolivia, transporting it out to the coast of Chile, and then refining it and transporting it to a battery manufacturing place? So all those types of changes will also take place. What will a car weigh in 2050? Maybe the same it weighed in 1970, which was a ton, right? Now they weigh 2.5 tons. If you buy a large full-sized electric vehicle, it's 2.6 tons. So why does it weigh 2.6 tons? Because your neighbor has a Hummer, so you need a big car, right? But what does a car weigh in 2050? It should weigh less than a ton, maybe. That would save us a lot of energy. How do we build a house in 2050?
Yeah, that's a great list of achievements to be made across lots of different areas.
It probably would have to be made, yeah.
I was really struck by the charts that you showed on the long-term need for oil and gas, even in a pretty aggressive decarbonization scenario. There are a lot of questions about capital availability for oil and gas these days. There's been a huge downward shift in investment with the rise of the ESG movement, and a lot of skepticism over the long-term demand for oil and gas. Capital availability for the sector seems to be a big challenge. I'm just curious about how you see that developing over the long term. Do you think that there's a misperception about how much money will still be required for oil and gas investment, despite this huge growth that we've seen in renewables and cost reductions, et cetera? How is the industry going to tackle this issue of continued sustained investment in oil and gas, even as everything else moves ahead?
No, that's a critical question. I mean, the oil price is now back above 50 again. We will see significant changes, and we will see significantly lower investments in new oil and gas over the next 2-3 years as a direct consequence of COVID than we otherwise would have seen. There's a potential for a spike again in the oil or gas prices. I think the Asian gas price is actually above $10 again as well. So the perception that we are going to get out of oil and gas is premature, to put it mildly. And you can just think about the effect of basically a global lockdown of the kind we had in April. We still used 75 million barrels per day during April. It didn't go to zero in a full stop of transportation, right? It went from 100 to 75. So that's also part of this. The strategic challenge for oil companies and for everybody is once it's clear that we've passed peak oil demand, which will happen in these scenarios. It happens. Sometimes it has already happened, or in 2030 in a reform scenario. If that happens, what's the strategic reaction among oil investors, oil owners, whether it's a national oil company or it's an IOC? So how do you persuade your owners or your banks that you can continue to invest in something where the demand has peaked? And if you don't invest, supply is going to fall much faster. So what will the markets look like? We have the same strategic challenge, I guess, but the opposite is on the part of the renewable spectrum is that if we continue to invest a lot in renewables, there's a risk that the price crashes unless we have the right kind of market regulation. So are we going to continue to invest as we see increased number of zero and negative priced hours for electricity or shut-ins like we have in California and Germany? So it's a bit of the opposite. So all that, so the market impacts of these changes is still unresolved. And how do we strategically position companies and investments in that spectrum? And I think some of the changes that we've seen in the financial sector with increased focus on ESG issues, climate issues, which are good, but also with a lot of unanswered questions as to what's the long-term impact of this, what's the long-term profitability of the things that we're forced to do or asked to do. Do they offer renewables lower interest rates than they do for oil and gas? I'm not sure they do. So it's what type of risk premium? One thing is on the equity side, but what about the debt side? Is the interest rate offered lower? I'm not sure they are. Maybe they shouldn't be. So there's a lot of things that are going to happen here together with when you look at the sort of the top line demand and supply and the reactions among different players in the spectrum.
Yeah, that's an interesting point about capital costs over the long term. I'm just curious about how this aligns with Equinor's own corporate strategy. So these are long-term scenarios, but Equinor has obviously set its own corporate strategy. It has a net zero target by 2050. That seems to be aligned with the rebalance scenario. But I imagine that when you do an exercise like this, you want your corporate strategy to be durable and sustainable with all these different outcomes. So can you just talk a little bit about how Equinor's long-term strategy as a company kind of aligns with some of the scenarios that you've laid out here?
Yeah, I think first I guess I should stress that the exercise, so the work done to come up with these three scenarios is independent of Equinor's strategic posture and decisions. My top management have not read a word in the report except the CEO's preface before it's published. And then, of course, the scenarios then feed into the strategy discussion in Equinor, together with other scenarios, the BP scenarios, the IEA scenarios, EIA, etc. And then we make our strategic sharpening, strategic priorities, and we have now sharpened our strategy in line with some other companies as well. And net zero by 2050 has become an ambition. And it's an ambition that's contingent upon society actually moving in the right direction or in that direction. We can't do this alone. But then of course in our strategic decisions, investment decisions, we try to make sure that they are robust irrespective of outcome. irrespective of scenario. And for any given company, there's going to be massive opportunities for investments in new renewables, but a bit differently and playing out in different countries and with different prices and so on. So as an example, as I think we are convinced that there will be massive need for new investments in oil and gas in all these scenarios, but the price might be a question. So the break-even requirements that we have internally are geared to at least assist us in believing that an investment in oil and gas that we do now will be profitable also in a rebalance type of case. I think it's also fair to say that the rebalance case, and if you talk about a 1.5 degree ambition or a net zero globally, is an enormous challenge, and it's incredibly ambitious to do that over the next 30 years. If we are to have any chance of reaching those types of targets or goals, companies like Equinor, regions like the EU will have to go net zero, because other countries or other regions or other companies won't be able to. So in a sense, the Equinor ambition, the BP ambition, which is then even more ambitious, if you like, than the rebalance scenario, is a necessary condition for having any chance of believing in something like rebalance, because there are going to be other players that are going to struggle more. So in that sense, the company has moved ahead of these scenarios, if you like, in its strategic ambitions. But of course, underlying very strongly that we can't get there unless we get the changes in framework conditions, unless our consumers accept it, are willing to pay the price for carbon capture and storage, for transporting carbon, for capturing carbon, etc., etc.
Thanks. Yeah, that's great context for understanding Equinor's strategy. We have lots of questions coming through the chat. Let me just ask one more maybe before I turn to some questions from the floor. I appreciated the charts that you showed on buildings and industrial demand. I think this often gets overlooked because we tend to focus on transport so much, but this is actually, it's pretty hard stuff, trying to decarbonize energy and things like industrial demand and heating for buildings. Can you talk a little bit about the scale of the challenge there for reducing emissions from those two sectors, and how quickly we can achieve change versus transport and the electricity system?
Mm-hmm. Yeah, it's easier to see sort of the line of sight to significant changes in electricity and transport. We have countries that are basically fully renewable on electricity. Norway is one of them. We also have a fully electric heating sector in homes, so we are renewable in that sense as well, and we have 50% of our car sales now being electric. But on the industrial side and on the building side, of course, some of it's a lot about the same. It's in terms of how much waste can you take out of industrial processes. There's reason to believe that the manufacturing industry, large parts of it, is really efficient already. So how much more energy efficient can we make it? We think we can move much more electricity into those sectors, and particularly if you look at it on a global scale, which would help. And then you can take out fossil fuels. Using hydrogen, I haven't talked about hydrogen. I think a lot of people are interested in that, but that's also one part of this where you still need molecules for hot processes in manufacturing. So you cannot replace everything probably with electricity. You need something else. But that's another scale of challenges. That's inefficient, or at least you have to pay an efficiency penalty. It's expensive. So you end up with some, and then of course it's how much carbon capture and storage can you put on a manufacturing sector to make sure that you can still use some coal or gas or oil in the process. Building sector the same. Is there it's also the rebound effects in the building sector is something which is important. Germany spent billions of euros retrofitting houses or stimulating people to retrofit their houses. The main consequence so far has been that the indoor temperature during the winter is now 2 centigrades higher in Germany than it was before, because when you make a house more energy efficient, you can spend more. You have the income effect of and that's the building sector is characterized by very often it's another person or another entity that gets the benefit of lower energy use than the one that has to pay the consequences. So you also have all those types of issues. And of course, the building sector has to grow. We are becoming much more people. So and retrofitting the old buildings in Washington, D.C. is going to be difficult, right? So you can't make it that much more energy efficient, even though a little bit probably. You're in a nice new building, but
and an energy efficient building. That's true. Well, I do need to ask a question about hydrogen. I think you said this is one of the buzzwords of the energy world for 2020. A lot of people are very excited about hydrogen, and we did get some questions from the Q&A. One question was, what prospects do you see for both blue and green hydrogen, especially for blue hydrogen, maybe over the next 10 years? I know that Equinor has some details on this in the full energy perspectives report, but maybe you could talk about prospects for hydrogen and the role of hydrogen as kind of an energy carrier, both in the near term and the longer term.
There's a lot of hype on hydrogen, and there's a lot of fuss about it. It goes in cycles. I think we talked a lot about hydrogen some 20 years ago as well. And hydrogen will become important. It will be absolutely necessary as a component of the energy transition in a rebalance case, especially if we don't succeed on some of the other variables, on energy efficiency or on electrification, etc. So, and then it's difficult. We haven't modeled it in detail at the global scale because we basically do not have the ability to do that modeling wise. We can make cases, and I think that's what our competitors are doing. You can make sensitivities. We've made a sensitivity for the EU to illustrate what this could do. There's no market for hydrogen as an energy carrier today. There's a large market for hydrogen as input into manufacturing processes and in ammonia. But so you have to speculate about where is it going to come from. It doesn't exist in nature, so you have to produce it. It has to be produced mainly from two known technologies. One is from methane, from natural gas. So if you're to be very optimistic on that, you'll have to build a sort of a CO2 handling regime driven by taxes and prices, where we increase the carbon capture and storage need significantly to allow for more gas into the mix that then becomes hydrogen. That is currently at least, it's 2 to 3 times more expensive than natural gas, depending on what you think about carbon capture and storage costs. The other way, which many people assign, and in particular in Europe, assign a lot of belief in, is green hydrogen, where hydrogen produced by renewable electricity. And then you have electrolysis, you have electrolyzers that can produce hydrogen within a significant energy efficiency penalty, and where ultimately what you assume is you're going to have spare renewable electricity. You're going to have too much, and you can't get rid of it, so you put it into an electrolyzer, and you produce hydrogen. And both of those, and that's even more expensive today than blue hydrogen. So that will be part of the picture here is that whether we go that route, to what extent we go that route, depends on cost developments. It depends on the necessary carbon pricing. It depends, and we're going to do this. And we're probably going to make a lot of mistakes as well, not only in hydrogen space, but we're going to make mistakes on nuclear. We're going to make mistakes on some renewables. We're going to make some mistakes on carbon capture and storage, and we're going to do all of that in order to get there. So, and of course, what we see is that blue hydrogen is a relatively simple. It's expensive and difficult, but it's a door opener for solving this. In a case, in one sense, it's a chicken and egg problem. We need to show that we can develop hydrogen so that we can create a market. And their blue hydrogen has a significant role to play until we get more renewable electricity that we can use for green hydrogen. And so then we'll see both of that, and we'll work much more on hydrogen going forward as well. But it's part of the thing is not a panacea. Nuclear is not either. There's no silver bullet here, so we have to do it all. And as I said, 2 billion tons of carbon capture or storage is what we have in this rebalance scenario globally. We're developing one plant or one storage facility in Norway now where we can sell 5 million tons of storage capacity per year to European customers. Well, we need 400 of those to get to 2 billion tons per year 400 of those reservoirs around the world in 30 years. That's 13 per year in that rebalance case. And if you're very optimistic on blue hydrogen, then we need more. And IEA and Shell and others are much more optimistic, if you like, on carbon capture and storage as part of the equation. So this we need all of this. There's no silver bullet.
Yeah, these numbers are pretty sobering. Thanks. One question that we had was on the challenges of decarbonization in emerging economies. I think this partly relates to some of the points that you mentioned about natural gas and sort of continued growth for natural gas demand in China and then in lots of emerging economies. But I'm just wondering, what do you see as the challenges for developing countries as opposed to as opposed to the developed economies in terms of the pace of decarbonization and the evolution of the electric power system in these countries? You see it as an issue of access to technology, access to capital, the challenges, political and otherwise, of displacing coal. What do you see as sort of the main challenges to decarbonization in developing countries?
Well, I think a very large part of the challenge in emerging economies is lack of access to clean energy. In some of the middle income countries and the large industrial countries, China, there's a carbon issue. India has a carbon issue, but in the poorest parts of the world, both in India and in Africa, as examples, it's access to energy, it's getting out of biomass, and avoiding replacing that with coal-fired electricity. Fortunately, there's a lot of hope in part of this is in decentralized electricity, at least to provide light and low intensity use of electricity. It's about, and then that has to do with access to capital. It has to do with framework conditions, political risks. It has to do with grid investments to some extent, even though you can do it small scale in cities as well. Once you start talking about manufacturing and heavy load types of electricity, of course the backup and the storage situation, the grid situation becomes more of a challenge, and then it's even more of capital. This is about the financing mechanism in the Paris Agreement being much too small. And just notice the contingent net zero target that Brazil presented yesterday or the day before, I guess, where they make it contingent on $10 billion in per year in financing of reforestation, avoiding deforestation. So that's the kind of transfers that we have to prepare for as well. So there's a lot of issues there. And of course, it's a big paradox that the largest part of the renewable revolution now takes place in countries where we do have enough electricity. I mean, we're replacing coal-fired electricity in Europe, then ultimately gas-fired electricity in Europe as well, but we have 100% coverage. And we risk not having 100 as a consequence of the intermittency of renewables. So we got to do something about that. But what happens to renewable electricity growth in countries where the electricity demand should skyrocket and we need to electrify large parts of the world which is not electrified? I can still remember in 1984, I was in Sierra Leone, and when the sun set, the electricity went out because there was no capacity. When you needed light, there was no light. And then the electricity generators in the embassy district started up and they got electricity. Nobody else did. I'm not sure that is very different today, but we have to make it different. And then we have to make solar panels, but we also have to provide for the type of backup that they need when the sun sets, whether that is battery or something else. So that's the big challenge. It's not only about decarbonization in the emerging economies, that comes as well, but it's also about energy access without recarbonization, where you increase the fossil fuel emissions. I mean, natural gas will have a role to play in that, to avoid coal, to get out of coal where they use coal. South Africa as an example, but it's a bit of both. But it's energy access is a massive challenge in parts of the emerging economies.
Great. Well, thank you, Eirik. We have lots more questions from the crowd. I have many questions myself, but I'm afraid we're going to have to draw to a close here because we are at the hour. But thanks so much to you, Eirik, for a fantastic presentation, very wide-ranging as always. Lots of food for thought. And thanks to the team of colleagues, I'm sure, who contribute. I'm sure it was a lot of people who take part in this exercise every year.
Yes.
It's always a pleasure to have you at CSIS. We really appreciate your input, and thanks for making the time to be with us today.
Thank you. Thank you for listening. Thanks for all the good questions. And sorry I couldn't answer all of them, but we'll see if we can get back to some of them. And I hope to see you in person soon. And until then, have a nice rest of the day and have a nice weekend.
Great. I hope we can do that next year. And thanks to everyone who dialed in and participating in this session.
Thank you.
Sure.
Take care.